All right. Good morning, everybody. So this economic data today is really not high on the list for potential impact, but it's a pretty big deal. And then we've got a lot of speakers today out there chipping teeth. Very likely nothing happens, but it only takes one of them to put their foot in their mouth and say something that they didn't mean to say, or to have it taken out of context by the reporters that are covering it. So you want to be really careful today. If you look at finance juice, you can see just the absolute long laundry list of speakers today. One thing that we want to be really focused on is 8:30 with the GDP revision. It's a really big deal, and it could potentially be the catalyst to a lot of things. So watch the clock, 8:30. But as we can see on FX Street, it's not the only thing on the agenda today. We've got Powell speaking after 4 o'clock. Now, just because he's speaking, that's not enough. We want to know why. If it's some pre-recorded message, or if he's going to take questions afterwards. Obviously, he's not going to dictate policy. That's not what this is about. And depending on what the forum is, we'll kind of lean on, how impactful his words might be. The analogy that I usually give is, if he's at some Boy Scout lunch, just doing a public service kind of thing, then his speech isn't going to really matter. Or, he's not going to say anything impactful. Usually it's not the speech in these situations, it's the questions afterwards. So that's after the close anyways, but it's still something to think about if you're holding, swing trades. We got a lot of additional auctions today as well. And just all around a full house. And then after the close today and into tonight, as you can see, Japan has got a whole lot going on and has the potential to be very impactful. So could be a busy night. If you trade in the evenings, you're definitely going to want to listen to some sort of evening news. Bloomberg Asia, by the way, is fantastic. Way better than the Bloomberg morning edition. So the big times today, 8:30, 10, and 1. All the other ones are important, but these are the biggest ones. Take a look at what's going on around the world. Hong Kong is down the most, but down less than what we've seen previous days. When we've been seeing it hit 2.5% to the downside consistently, only being down about 1.25, kind of feels a little bit better. Not a lot better, but a little bit better. Still not expecting anything out of those China ADRs or any real impact from that direction. All that soft stimulus just isn't helping out much, and if the Evergrande situation does begin contagion around the world, this would just be the slow bleed start of the whole thing, right? In our markets, the Dow is down the least, then the S&P 500, then the NASDAQ, and then the Russell down. But none of those are down more than 0.5%. So, in the grand scheme of things, really not that bad. We are continuing to see oil out of control. This is not going to get any better anytime soon either. The U.S. petroleum storage, or the strategic storage that the nation keeps in times, it helps buffer price shocks. At least that's why it was originally, its original conception way back in the day was for that buffer. oftentimes it's been used by, different presidents sitting in office to, kind of ease prices around elections, make them look better. Um, there's no fingers to point, though. I mean, every single administration does it, has been doing it since we've had this thing. But the storage is down. They don't have basically any ammunition or any capacity to buffer the shocks. So until that changes, they don't have any way to combat these price shocks that are coming through with energy. Just keep in mind how energy directly affects inflation and wages. There has been talk, of seeing it above 120 by the end of the year. That's not a call for a long trade, by the way. Energy is a fun beast to trade. Oh yeah, no, what could go wrong? The European central bankers are going to turn to AI to better understand inflation. Yeah, what could go wrong there? All right, so as you can see with what's going on here in the dollar, we're above the 106. If we're looking at this on a daily, it looks like a good solid run, not that bad. We put it on a weekly, and you've got just this non-stop drive to the upside. I mean, if that was a stock, we'd all be crazy excited about buying it, right? And it still looks really bullish. It's not done yet. Not even close. And this is one of the things that needs to change. All right, British pound, US dollar. We broke this key level. We're continuing to go to the downside. The dollar is the second part of this pair. So when we're going up, the British pound is stronger. When we're going down, the US dollar is stronger. That's the way ratios work. So we were just talking about 106 and climbing, and that it still looks really bullish. As that Dixie continues to go up, the expectation we're going to continue to see this go down. We've got another level of potential support around that 119. If we were thinking of, things that might turn the Dixie around, this finding support and heading to the upside would put pressure on that Dixie, the DXY. Then we got the euro dollar, same thing. Euro first, dollar second. So this moving to the downside is still that Dixie moving to the upside. We're at that key level of support. Should this find some support here and make that move to the upside, the expectation would be that perhaps we'd see the Dixie stop that advance, and perhaps pull back off of those highs. So if we're looking around at ways or things that could assist in the Dixie not continuing to make that week after week higher highs, these two would be a good start. And US dollar, Japanese yen, dollars in the front part of this pair. So when we see this thing going up, it's because the Dixie is going up, or not because, but you get the idea. Dollar, this thing goes up. US, the Japanese yen, if it's stronger, then we're going down with it. When we're looking at US dollar Japan, 152, this previous high has been their line in the sand. That's actually 152.5, but either way, 151, 152, they've made it clear that they're not going to tolerate it past this level, and that they're not even going to tolerate it at that level. And so it continues to be one of our focuses that they're going to go in and intervene. And one of the ways that they're going to intervene is through their 10-year bond, or through the yields, the 10-year. And that also hits our 10-year. Kind of weird to try to explain how that all works, but we don't really need to know how it all works, right? Just like with the TV or the car, you just turn it on and it does its thing. If they intervene, the consequences or the result of their intervention would be US dollar Japan falling to the downside. We're very likely also to see the Dixie fall, the 10-year US fall, and that would be tailwind for the NASDAQ and the S&P. At least that's the theory. The thing is, it doesn't have to, right? We don't have to go up just because the dollar fades off or the 10-year fades off. That's just generally what we do, right? So it's not an inverse correlation. It does not like a teeter-totter. When one side goes down, the other has to go up. It's not that kind of relationship. But that would be the expectation, is that we get some relief. The kind of relief that we're talking about, this is the SPX. I'm on a weekly chart. This is last year in October, the last time that Bank of Japan intervened, globally coordinated intervention. They had help from around the world, and we came off of that low and haven't been back, right? Now, it's a lot of other reasons that we continued to go to the upside, but that reversal and that week, I've actually done a video on it. We moved 1.5% in the ES in 45 minutes the day that they intervened. That's a fantastic move, right? I'm talking about, we haven't moved 1.5%, in a while, to where we get that kind of move in 45 minutes, hour and a half, right? So the intervention, if it comes soon, like we're kind of expecting that it's going to be, the move would put us right back up, very likely close to the high on the year, right? Looking at 4,500, 4,600 by the end of the year. The thing is, there's just so many other bricks in this wall. Japan's only one of the bricks in the wall of worry. There's still a whole lot going on in a lot of other places that can continue to send our markets to the downside. So we're continuing to watch US dollar Japan, continuing to watch the Japan 10-year, watch our own 10-year. You can use the TNX in the daytime, or if it's not, if you're looking at it after hours, use the 10-year futures. And keep your eye on bonds. And as you can see, we broke down yet again a very critical level. These are levels that we haven't seen since 2009. Eight 8:30, 10, 10:30, 11, 11:30, 1, and 4 o'clock. Got a slightly elevated volume this morning. We're in the 160s. We were at 158 at 7:30, which is when this tool marks what the cumulative volume was. We're triggering elevated volume levels This isn't extreme yet, but it is getting close, right? That's kind of what the benchmark is for, kind of let us know when we're getting into that extreme. The average is marked by this red dash, right? But that's total cumulative overnight volume from midnight all the way to 9:30. It reads the entire thing and then gives us an average. So, you know, we're not even at that average yet, but we're a lot closer to it this morning than we have been, and you can see how it's starting to pick up, right? This day, Tuesday was higher than Monday, Wednesday was higher than Tuesday, and now this morning, so far, it's looking like we're going to be higher than Wednesday. So the volume averages are increasing. If we didn't already know that there was something on the table, this is where we would want to call timeout and start looking around and asking, where's all this volume coming from and what's going on? Since we already know that there's something on the table, it's not too concerning. What's interesting though is there's no market maker move this morning. If we're looking at potentially impactful situation this morning, where's the hedging? And there isn't any, or there's not enough yet to trigger the market maker move. We do have a relatively tight range since the Globex opened last night, and it's been really clear. So we just run this across. Got a nice clean wave. Pretty decent reciprocation levels on each side. And it's consistent and persistent. Let's kind of move this over to 6 o'clock. There we go. We're at the daily pivot point, so we don't have an MDP, and we're really close to the ADR half, the roundy at 4,300. Got a cog line at 4,311, a voodoo line at 4,306, another cog line / voodoo line at 4,332, and the ADR half 4,345. We've been dancing around these lows since Tuesday. Having set that 4,307, revisited it on Wednesday. We're right back there again this morning on Thursday. It's like a hamster on a wheel, a whole lot of work getting done, but we're not getting anywhere. We're underneath the major moving averages. Got the 10-day, the 10-week, the 20-week, 20-day. All overhead. But we do have that 4260 as a lower level. It's not only the 50-period moving average, it's also measured move for a lot of these different candles. It's a measured move from the range on the pullback, and it's also the measured move from one of those candles. So we get that level 4260 from a lot of different sources. It was really surprising that we got close to it and we didn't hit it. But should we start making another trip to the downside and say we cross yesterday's low, I'd say we're almost destined to get there at that point. Ten-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We've still got that air pocket really shallow over our head. If we can get through 43.32, the cog line, we have that shallow area, should be able to move through it relatively easy and get us into the 43.70, 43.80 area. If we can get on the other side of that, easiest to just say it's about 4,000, 4,400. If we can get above that, then we've got another shallow area and should be able to get back to the point of control. It's worth noting that we're still nowhere near close enough to bring in that point of control down to us. We're now just going to bring this thing across. It's a Linreg line. Thinkorswim does have Linreg tools too, by the way, if you wanted to use it through the indicators. Just keep in mind how many candles you're looking at really matters. So a 5-day, 5-minute chart is going to give you an answer completely different than a 2-day, 5-minute chart. And most indicators, if you're on a 5-minute chart, it doesn't care how many days you're looking at. Then Linreg tools, it does matter. So you want to be consistent with how many days you use. We got a classic D-shape profile this morning. It's a really tight range. Really not a lot of insight on that volume profile yet this morning. The point of control that we had carried forward from Tuesday into Wednesday did its job, had a really nice opportunity yesterday, and it's an overlapping point of control, right? That 43.13 from Tuesday became the same point of control that we had on Wednesday, and it's now the same area that we're interacting with on Thursday. So one, we're done with that point of control, we'll just take it off. But two, when you've got overlapping points of control like that, just remember first what the point of control is. It's the place where we had the highest amount of volume. It's the highest amount of volume for a million different reasons. There's no reason to try to bake through why they decided that was the place that they wanted to buy or that was the place they wanted to sell. That's where the most transactions happened. We're not guessing or assuming this, it's just fact. That's clear, it's right there. So it is this demarcation line, this place in the sand. And should we continue to drive farther away from that, I believe that's where we're going to start to really see the effects of it. So we did get down below it yesterday, but we managed to get back above it. That was a pretty decent save. But I believe that that was also part of a news push, right? And that's not trend. If you're newer to trading and you're maybe struggling with how you could have traded that yesterday, and you was waiting for a pullback and you didn't get it. Momentum pushes don't give you pullbacks, right? You have to buy high, sell higher, or go to a small enough time frame where there actually is a pullback. Either way, the basing pattern still isn't formed yet. We don't have one. We still need to quit setting lower lows on the week. And so far, we haven't been able to do that. So it's still no turnaround signal, still no basing pattern yet, and still no reason to believe we're headed to the upside yet. It's been a very clean and organized move to the downside, and we had positive market breadth through half the day yesterday. The broader market was fine. It was the indexes that were getting kicked in the teeth. We're still inside the weekly expected move, by the way. So, when we ask that question, have we moved too far, too fast? And are we expecting any kind of mean reversion, linear regression, heading back to the upside, oversold flip? Nope. We're not oversold. We haven't moved too far, too fast. There's no mean reversion scenario yet where it owes us a move to the upside. Nothing. This has been very clean and organized and efficient sell-off. And we're still within the range of what we should move for the week. We're 1.75% below the 10-day moving average. And we are working our way back up from a low. Just this is like a really ugly wave. So it's not nice and clean and smooth, but we did set a low and we are transitioning back. The 10 is going to continue to move towards us, even if we don't continue to move towards the 10. So as long as we're not driving away from it, we will eventually get back to it. Now the 10-week, we're just continuing to maintain distance from it. We haven't started to roll back towards it yet through this measurement. 2.5% away from the 10-week. We've been farther than that even earlier this year in February. And, obviously last year around that October intervention that I was mentioning, when we were down below the 10-week by more than 5%, more than 5.5%. So this 2.5 is nothing. All right, things that are up this morning: nat gas and Bitcoin, which is most definitely not exciting, right? That's not going to get us very far. Huh. My computer just went all goofy. All right, I just got a Zoom warning here about my audio. You guys can still hear me? Okay, thank you, thank you. I don't know, something with Zoom. Goofiness at its finest. So we've got nat gas, Bitcoin, and pot stocks. A little bit of real estate, but I wouldn't lean too heavy into it. And a little bit of retail as well. Let's see what we can do with that retail. Well, no, we're not going to dig into it. All right, so we got Bitcoin proxies like Riot, Mara, Coin. They're really not looking very good. They might be up this morning, but I mean, that's certainly not a picture of, bullish conditioning that I would be anxious to jump into. These bars are getting wider and wider, like a classic megaphone pattern. And I mean, take a look at Mara with this consistent and persistent move to the downside. It certainly doesn't inspire a long trade opportunity today. Of course, when we're talking day trades, the bigger picture, the greater trend isn't really the number one focus, but I mean, these just don't even look remotely good. So sure, crypto's up this morning. Maybe it will clean up as we get, into the open a little bit. And pot stocks are up this morning. That's barely a reading at all. Yeah, okay, they may be up, but none of these are looking really any good. So that's not overly inspiring either. And we got energy. Now we're starting to see a little bit of precious metals moving. If we do get a move to the downside in US dollar Japan, it's very likely we'll get that lift in precious metals. So that's an opportunity for like silver through SLV or gold GLD for an opportunity in those, more likely as a day trade. Really don't have much expectation of a swing trade in those yet. We're not ready for precious metals yet. We are seeing a nice fade in the DXY, the Dixie, the dollar index. So we're getting closer to that 106 level, but it's got a lot of work to do, right? We need that thing down below like 103, 102. So as we continue to hold these levels, one of the concerns is that it's going to just run right back up again. That things had like 11 weeks or 10 weeks in a row of green. So, you know, it's got a lot of work to do to start to back off. But one of the things we don't want is big moves, right? So like the 10-year, as I'm speaking, is starting to fall down. Look at the size of these candles versus what we've had most of the night. We don't want big, wild, crazy moves, right? And I'm sitting here looking at US dollar Japan. This is like a chewed up piece of bubble gum. Well, that's not useful, right? When you just got this clump of candles that isn't giving us anything worth looking at. So swap over to US dollar China. At least we got something to get, a chart that actually is telling a story, candles that we can read. Got a low in play. But it's not a low with a pivot to it. So a minor low, 7.3. We'll see if it catches any support there. If it catches support and begins making a move to the upside, we're likely to see the Dixie also begin making moves to the upside. And we're getting a sudden push in bonds, which makes sense with the 10-year moving like this. The thing is, they're not teeter-totters, right? One doesn't have to go down when the other goes up. And it's been just wild enough lately that we've seen moves in yields where we didn't see an equal reaction in bonds and vice versa. So it's good to see we're getting the same move. But really, we're not getting anything out of the Dixie at the same time. Normally, these two would be what we've seen lately, is that a move in yields is also matched with a move in the dollar. We're not getting that. And crude is still holding these highs. So we want to see something change with this. We've got a nice trend line breakover forming here. A really minor one if you wanted like a drop base rally, or a bit of a bigger one if we're just, you know, catching those highs. For some easy targets to the upside, just measure the entire range that we have in the Globex here and use some quant levels, 50%, 100%. Well, 50% of that move gets us to 43.39, just kind of round up. And a full measure would be 43.50, nice round number. Speaking of round numbers, we're going to check the spot gamma levels for today. See where the call wall is. And the likelihood of us hitting it or not. So always check the price or the date. It's September 28th. Today's the 28th, so we know it's good. Don't just assume that it's an updated levels. The 1-day move is 0.85, which means if we go beyond that measure, we'll see the algos kicking in. They'll sell into selling or they'll buy into buying. Now, we're not talking about just wicking through that level, you know, and then they automatically trigger. But if we get that far and then it wants to continue to move, and we get some candle closes that suggest we're going to, then they're going to kick in and add to it. The volatility trigger is 4360 in the SPX. And the call wall 4,500, the put wall 4,200. Now that is for the SPX, it's not for the ES. So I'm not going to read these numbers out. I'll just keep the screen here for a second. You can just screenshot it. These are support and resistance through option strikes. Google's up this morning. Apple's down, Amazon's down. Meta's up this morning. Tesla's down. Nvidia is basically flat, but it's up slightly. Netflix is down, and Microsoft is down. So Google, Meta, those are the two that are up. Meta had a really nice pin bar. I mean, you got to admit that takes a lot of work to turn that market around like that and get it back up there. So it did close down, yes, but well off of those lows. If we were looking for a red to green recovery, Meta's a prime example of that. And we've got a really nice TRB set up here, right? Don't focus too much on drawing that line. It's just a visual. Price doesn't care where you drew the line. The line is just there to help you see the play better. So do you use the body? Do you use the wick? I promise it won't matter, right? Because we're not going to use that line for a trigger to get in or out. So if we're talking red to green, R2G is a trade strategy. As simplistic as it sounds, there really is a lot more than just a simple red to green. But if you go checking out R2G, red to green, it's a day strategy. So it uses a daily chart for its outlook, not necessarily for the trigger to get into the play. Meta had a really nice recovery off of that low. If we were to look at this and consider what the follow through would be, a start needs to be that we get outside of yesterday's range, which just so happens to also be the start of this trend line breakover. If we can get that, then we're out of this cluster of candles, the 3 in a row, and we can begin that push to the upside. So the next level of concern would be 305-ish. Let's just get some real levels here. 305.38. 308, and then back up to the top at 312. Now, I'm telling you, it can make that move in a single day. When Meta wants to, this sucker can move. It's got a 21-day average move of $8 right now. That's what it has been doing over the last 20 days, is averaging about an $8 move. And we can see the choppy kind of sideways candles, not really massive, not that big. A TRB is such a great trade strategy because it gets to the top a lot of times in a single bar, whether it's a weekly, an hourly, daily, it doesn't matter. So if we go from a close of 297 and we get past 307, that's your $10 for a start, and then get higher than that into say 312, then you're looking at a $15 move in something that usually moves $8. So let's just take that 8 and double it and say $16. Am I reaching? I don't think so. Not even a little bit. We can easily make twice the normal range. Now, I don't know if it's going to make that move. right? But I like that look. I like this setup. And out of all the other FANG names that are down, Meta's up this morning in the pre-market. It's a good start, right? Google also is up this morning, maybe not as well, and it doesn't have the same setup, but we did get the inside day breakout yesterday in Google. And look at all these other names. NVIDIA closed green on the day, but it was still stuck inside of yesterday's price action. Microsoft also closed green on the day, but again, stuck inside of yesterday's price and maybe even below the 50% mark. I didn't check, but there's the 50%. It couldn't even close above that, right? So sure, green, yes, but that doesn't inspire. And Meta closed red, wasn't able to make this whole move in a single shot, but it's got a nice look to it. It's got a good start. Want to see that follow through. Let's see if we can get this push. For Google, with this inside day breakout, it already managed to get through the worst of the resistance. Needs to hold now above that 130.36. And we're at 130.93. So we're there. We can start triggering into the TRB levels. Get above 131, get above these wicks. These wicks are a little concerning. It shows that there's sellers waiting up there. We don't know if those sellers are done, but considering we haven't moved through that zone successfully, you got to kind of consider that they're still there. So there's going to be a little bit of tussle around that 132, but there is a gap to close. 133.74. So a lot of work to do on Google. I like it as a good starting point, but you know, it'd have to prove things. And if you are going to try to long this thing, then you definitely want it to stay, give it a little room. If you're running shares, 129.77 would be the open of yesterday. Well, the open of Tuesday. Yesterday's the green candle to Wednesday. So Tuesday's open, 129.77, really needs to hold above that level. If you want to use it really tight, then the close of yesterday, 130.54, because we're at 130.94 in the pre-market, give you a 40-cent move. Yeah. So Google and Meta, I kind of like Meta better for its shape and its setup, but I like Google because it's already outside of yesterday's range. And Amazon is down quite a bit. I mean, it's not drastic. But we're near breaking out to the downside in Amazon outside of yesterday's range. None of these others really have a nice setup. Kind of gap down in Netflix after it closed near the low anyways. If you look at a lot of these others, they didn't close near those lows, but Netflix did. And we're gapped down this morning. I like that. You can get those reversal days where you gap down and they do a rug pull and then they run it back up real fast. We're not talking about, you know, running this thing back to like $400 or anything like that. But we are looking for one green day and a sea of red. So if we use Google for an example, a day like that, it opened, gapped down, and then it had the inside day breakout to the downside, and then they ripped it and rallied it back up and cut through the other side. So we don't want the gap up day like this. It's okay. I mean, there's nothing wrong with it. We're just looking for the gap down and recovery, right? So with Netflix, since we are gapped down and we're already nearing that inside day breakout, we would want to trigger by getting back inside of yesterday. So maybe if it gets back above 376.25, it's not even below that yet, but you know, if we get into the pre-market, through the pre-market, and it continues to gap down, maybe it heard me talking. That thing's already moving up. Let's go check it out in the bigger screen. Let's see. Yeah, that thing heard me talking. Sucker. Either way, I like this. It has the potential, right? But I would like it more if it would actually get outside of yesterday's range to the downside and then come back in, because it gives us a trigger. Without that, we can still play it. Maybe start with just measuring out yesterday's range and using 50%, that halfback level. A continued short would hit that as a resistance, and it'd be a good place to go to get short. Otherwise, if we can get above 33.80.24, then you could use that for, say, your alert, and then an entry if we get above this pivot point high. That way, one triggers the alert for you, kind of gets your attention, get primed and choose your strikes, and then we get through this and you get your breakout. It's a bit of a stretch though. I mean, it's about all we've got out of the rest of these. I don't like any of them. In the bigger picture, they're all stocks headed to the downside, with a market headed to the downside, and that hasn't changed yet. So, you know, we're not looking at swing longs running all these back up or anything like that. Just day trade plays, potential day trade plays if we get the setup. Watch the clock today, guys. It's going to be one of the most valuable tools you have. And be careful, be safe. I will see you all tomorrow.